are still eagerly awaiting a spot Bitcoin ETF. Reports out in just the last hour that the SEC is telling firms to submit final paperwork ahead of that potential approval. More than 13 companies have filed for the fund. And our next guest says after approval, there's a new battleground in the space. Let's bring in Chief Strategy Officer at CoinShares, Melton Demers. Melton, great to see you. I want to get to the battleground in a minute, but I'm curious because now we know that the vote is scheduled for sometime next week on these various applications. Is this going to be a sell the news event?
Well, first of all, I think we need to get a little chimney. It feels like the papal conclave. We're waiting for the white smoke. We've been waiting for a while, but certainly this is a very hyped event, most talked about event, and I never want to talk about ETFs ever again after this. But look, I don't think this is a sell the news event, and here is why. Let's just talk about flows. I love talking about flows, and flows are really how we figure out how people are trading sentiment. And if we look at what happened last year, in the last week of 2023, $243 million of flows into crypto ETPs, primarily Bitcoin, $2.2 billion for the year last year. It's not stopping. There's demand for Bitcoin. When these new products launch, we've heard there's one issuer that's seeding their fund with $200 million. Rumors now that BlackRock is coming in with $2 billion. All of that leads to buying of Bitcoin. It leads to demand for Bitcoin. So I don't think it's a sell the news event because Bitcoin limited in supply. That's one of the really interesting, unique properties of it.
So what's that battleground that you think is coming?
The battleground, it's the battleground for all asset managers. Fees, baby. Fees, fees, fees. We're all about the fees. And here's what's really interesting. Fidelity came out of the gate really early on, 2 weeks ago, 39 basis points. That's pretty low for a specialty ETF. We were thinking it would be in the 70 to 100 basis point range. Grayscale right now, the Grayscale Trust is 250 basis points. We've got Fidelity at 39. Invesco and Galaxy are 0 until the first $5 billion in AUM. I believe BlackRock is coming out at 80. So the fee game is going to be an interesting one because they're all the same thing. It's Bitcoin. How much will brand matter, and how much of this will be about fees?
I'm surprised that GBTC is such high fees. I didn't realize that.
Extraordinary. Melton, it's Tim. Hey, thanks for joining us. So what's after Bitcoin? Ethereum, I guess. And is this going to open up? Look, we begin the process now for moving out crypto in terms of liquidity and exposure. And what's the timing?
Look, I think Bitcoin is obviously the first. Bitcoin also has the most regulatory clarity. Gary Gensler, the SEC, has repeatedly stated Bitcoin is not a security. There's no interpretation as such. I think Bitcoin needs to be, it needs to take some time for the Bitcoin ETF to trade. I think when it comes to other crypto assets, it's going to take some time just because there isn't that long track record. As of 2 days ago, Bitcoin, 15 years old, the Bitcoin network first block was mined 15 years ago. Bitcoin's been around for a long time, battle tested, markets are very deep, very liquid. We don't really see that in the longer tail of crypto assets, but what we do know is there's tremendous investor demand. Today, there is over 50 billion in global AUM across crypto ETPs. Now, 38 billion of that, or over 75%, is in Bitcoin. But the next 10 billion Ethereum. Then we've got Solana, very popular this recent year, and a long tail of others. But I do think it's just going to take some time for the market to get comfortable.